Welcome back, ladies and gentlemen, to this historic rally that is underway right now. This is the third week up in a row, accelerating higher to fresh all-time highs. It really is historic, breaking records across the board. We're going to talk about the price action, really focusing on the price action, adapting to the change of environment. I think that's so important. We're going to look at some educational kind of framework here on how we can get better at recognizing these scenarios going forward. We're going to skip most of the news flow because I think the charts are telling the big story here. And then I also want to talk about where I'm finding opportunity looking ahead. So it should be a fun episode. Let's get into it here. This is the NASDAQ 100. I'm sure everybody is seeing all of the records that it is breaking here. This is 13 days up in a row, consecutive days to fresh highs here. And this is the V-shaped rally that I think everyone wanted, just not starting at the price that everyone wanted. That's something we talked about in last week's episode. It was a more shallow, sort of unsatisfying sort of pullback perhaps in the indexes, but we are off to the races right now. 4% on that turnaround initial week, 4.5% follow through week. I think this is the week you had to change gears. We talked a lot about sort of upgrading our forecasts and changing gears ourselves. And now you have just this explosive 6% move this week. A couple of other dynamics happening this week was the monthly OPEX. It's important here. I'm not going to overstate. I'm not going to make an excuse that this is the only reason we're up. I'm seeing folks, kind of try and spin it with that negative tone. There is some, systematic, the hedging that goes on, and especially when we're in an event risk like we were in, as that event left tail risk sort of comes down or gets off the table entirely, and you have an OPEX cycle that you are in the midst of, you do have a lot of kind of systematic buying. But generally speaking, I think, again, like we said last week, you have to respect the price action here. This is a squeeze. This is everybody kind of rushing back into the pool at once, and we are getting a fresh breakout. Look at it this way, and we're going to spend time looking at price action, but go all the way back to October of last year, and we are finally just breaking out from an October price level. Again, I know that's not the most satisfying thing to hear, but for the past, call it 6 months, we're up a little bit. Here's the stairs down, elevator up. These are the stairs right here. Stair, stair, stair. Everyone was hedged up. We had a big, event risk. We knew what the risk was. We saw it in front of us every single day. And the VIX was, just pushing up 25, 30, come back down 25, 30. Then it comes back down. And that's why I think we couldn't quite get the big unwind that we wanted to see. And then we got that springboard back up. This is more research here. This is from Bloomberg, S&P 500 fast-paced weakness to strength rally. So basically one of the second fastest rallies from oversold levels in the S&P 500 to overbought. Peak hate. I posted this on Monday for software. So software was what wasn't working last week. It started to break down. It accelerated lower and it turned around on Monday, and it's just saw basically follow through all the way into the end of the week and closed higher. Now, this is a note that went out to subscribers last Friday. So this was on Friday the 10th, and this was our daily sort of momentum Quant Rockets report. And I put a note in here saying, what a huge influx of new momentum signals this week. Speaking of last week, it's one of the largest surges that I've seen on record. This type of surge often lines up with market bottoms. Of course, there are no certainties in this game. So basically, if you were kind of a bottoms up looking at the market last week, I think you saw the flurry kind of coming underneath the hood. I know there's lots of talk, and we're going to look at 52-week highs, how they're very unimpressive. But when you look at just individual stocks from a broad-based perspective, they were lifting up aggressively. And I want to actually show you right now some of our dashboard research in Quant Rockets, because I do think it is very important here to take a minute and talk about. So this is a new dashboard that was published this week for subscribers, or last week. I'm losing track of time. But this is a new market insights or market environment dashboard that we have here. It updates every single day. And this bottom right, well, in fact, this top left and this bottom right is what I want to draw your attention to. This is effectively our outlook, our swing trading outlook on the stock market. This is mechanical. This was a very hard week or the last 2 weeks have been a very hard week for the discretionary trader to adapt. There was so much negative news. There's so many reasons to be bearish. We're getting bombarded with it, 24/7. And to be able to flip gears and start to get invested and unwind the negativity, it is very hard. This is why I'm a systematic trader at its core, because these decisions, these swift periods where if you miss these 1, 2, 3, 4 times a year, then you can really hurt your profits, or you can really just be left sidelined. So these tools that are rules-based are exactly what I've been using. I'm just now finally able to sort of showcase them and get them in an interactive dashboard on the website. But if we look here at our market health, so we were in for most of February in the mixed state where we're just basically saying, things are kind of showing us both, bullish and bearish evidence, and we want to raise some cash, be a little bit more picky and defensive. And then come March, we just flipped outright to the weak bearish side where we just, flat out say, expect difficult swing conditions to the long side or raise some significant cash. But on April 7th, so we talked about this, I think last week, we started to move up here into this mixed state again. And that's what automatically gets me to switch gears. That's what automatically forces me, that's the way I look at this, to get capital, to get some cash back into the market. No matter how uncomfortable I may feel, this process is telling me, hey, you got to just at least upgrade the way you're looking at this a little bit. And then on April 9th, so this was late last week, we moved back into the excellent swing environment, which I know sounds crazy given everything we were just in. But that once again is another notch up where I don't have to go full, just right into the market, just buy everything indiscriminately. But it tells me that I need to get invested here for a reason I may not understand yet, but the market's sending a message. And that's the way I look at this. And that's what this dashboard is designed for. And I think it's instructive to have a process, whether you're using a dashboard like mine, or you're building your own, or doing your own process to like raise or lower exposure. I think having rules, guardrails, workflows are what's needed in a market that is so volatile and fast-paced as we currently have. And so just to kind of round out this discussion, we'll come back to this and look at trade ideas later in the video, but our disposition right now is this is an excellent swing environment. But if we look on the right-hand side, we do acknowledge that there's a warning here. We're extended. And so really we're saying, pullback risk is elevated, avoid adding too many positions at once. It's a market we want to be invested in, but we have to recognize that we have covered a lot of ground in short order. So we don't want to just put all our chips in the table Monday. If you're not invested in this market at all, well, you got to kind of inch into it. And if this environment is going to stick, and if we are in a new regime here, we're going to have plenty of time. We're going to have plenty of time to look for swing setups, to get involved, and to participate. You don't have to rush out right now with the odds a little stacked against us. So a little bit of a rant there, but I think it's important because it shows kind of process and how to adapt here on a swing trading perspective. And we'll talk a little bit more about that. Let's get back to our presentation and let's hit with our sponsor, IBD, which we didn't mention at the top of the show, but here they are. They sponsor this episode. We've got discount links in the description of the show. So once you get done watching, check out IBD, Market Surge, IBD Digital, and some sale discounts. All right, so a little bit of news flow. I said I wasn't going to talk about news today, but we are in earnings season. Banks kick things off. So far, so good. Reaction was welcoming, I'd say, in terms of the stock reactions, but obviously, we had some other catalysts kind of going on. Earnings season is here though, and so next week it's going to start to heat up. These are the numbers. We're going to run through these pretty quick, and then we'll get into some charts and some trade ideas and where I'm finding opportunity right now. NASDAQ 100 up 6.18%, Russell 2000 up 6%, oil down 7%. S&P 500 up and to the right all week, fresh all-time highs above 700. The VIX at 17.5. So here's the thing, and I was going to talk about this later, but I'll probably forget, so I'll bring it up now. if you find yourself underinvested right now, volatility and insurance and hedging is much cheaper. So if you aren't involved, you can start to dip your toe in and you can pick up some cheaper put protection. This is something similar to what our Galahad trading system does. This is our longer term trading system, but it got involved into its trend position earlier this week. And at the same time, what it did is it put on some protection, because that's how, it's going to offset the risks of kind of jumping into a heavier size trend allocation. So right now with VIX cheaper, something to consider. Dollar index rolling over this week, coming down, and yields coming down. There were two risks we talked about last week, or the two things we didn't like about the market. Interest rates were sticky. 10-year yield was staying pretty high in bid and kind of flagging out up here. So it started to roll over towards the end of the week. That's nice to see. And oil, which I guess we looked at earlier, inflation expectations, just, inputs to the economy, with oil staying above $100 a barrel, that's a problem for the market. Both of those things on Friday started to roll over. So, the market in some sense is trying to reprice a lot of this inflation expectations, taking, Fed hikes off the table, worst case scenario, and it's removing that from its distribution of forward outcomes. And that's why you're seeing a lot of this repricing. I'm not saying it's right, but that's just what the market was doing over these past 3 weeks. Sector performance this week, energy again was the big standout down. So was utilities, but everything else, it was pretty good, broad base. Most sectors here are bullish in our work. Healthcare even is bullish. Utilities are still bullish. It's really consumer staples that are trying to be a little bit stubborn, and energy, which is in the negative state. All right, 52-week highs. So there's a lot of comments, concern going out with 52-week highs. I do agree. It's not ideal. It's not ideal to see a market push to new all-time highs and to see less than 100 stocks hitting 52-week highs in the NYSE. That's not ideal. And so what I would say is, let's see how this plays out. I'm not so concerned, or, I'm not willing to fight the market or be so stubborn to say that just because we're not seeing 500 new stocks hit 52-week highs, you can't buy this rally or you can't believe in it. I think you can be, again, have your exposure in the door. You can remain skeptical. You can have stop losses. You can have exit plans, but this by itself is still not enough of a reason to get too concerned. I also want to see how this stacks up over the next week or so. So if we are still up here at new highs next week, or we're consolidating, what does this look like underneath the hood? That's what I'm going to be concerned about, or looking at, is just, can this catch up? Because I know, based on our momentum work, there are lots of stocks that are kind of rising from the dead right now. And so if they continue to see, that momentum push, can we see more stocks hitting 52-week highs? Warren Pies points this out. I love Warren's work over at 314 Research. And so he basically says this is effectively the worst or fewest 52-week highs from a new all-time high perspective in terms of a recovery rally. So yes, totally concerning, totally something we can look at and pay attention to, but it's not going to cause me not to participate at this time. Percentage of stocks above a 20 SMA, still overbought, and the put to call ratio, again, hedging is cheap right now. So take advantage of that if you are trying to get involved in the market, but are still concerned about the market. Bitcoin, I posted a video yesterday on Bitcoin. I think crypto, and I'll say crypto, but Bitcoin and crypto is an interesting spot to look now. It has participated, but really not that much. To be quite frank, 75K has kind of been that area, and I did the whole video on this yesterday. It's a 3-minute video, so go check it out on the YouTube channel. But this is where I think we can find the next leg up, and I want to talk about that as we go into the second half of this video. Earnings on deck next week. We've got not too many of the big Mag 7s yet. It's going to be the following week, but of course we have Tesla out on Wednesday, and then we have Intel on Thursday. I think those will be probably one of the two biggest that the market will be paying attention to, but obviously there's a lot of other stuff going on. So let's get some charts ready. All right, here we go. We've got some charts in front of us. Warden TC2000. This is the S&P 500 cash settled market weekly time frame. What a beauty. So again, accelerating higher here for the third week in a row. Just so impressive of a squeeze. It's a squeeze. Again, it's everybody kind of rushing back into the boat. This was not my base expectation. So again, on record for the last month or two, I was saying volatile and sideways, choppy for longer. Obviously, I was wrong in that call, but I incrementally upgraded my call last week, and I'll upgrade it again this week because of the demand that is coming in here. It's not to say that we can't go lower. We obviously will pull back, digest, back and fill a little bit here at some point, but if I look at some levels here on the S&P 500, I think we have a pretty clear line in the sand, and we can use, call it 7,000, 6,950 if you want to be cute, but somewhere in here is where you want to see this market now kind of base and hold above. You want to see it accept now at these new highs. That's what I'd be looking for. So, you know, thinking about exposure and thinking about being able to cautiously get involved here into the market, one solution is to really use this as a level to pay attention to manage your exposure with. You can get involved in the market or look for those lower risk opportunities, the stocks that are maybe not too extended. We'll look at a few later, but if the market starts to roll over below this 69.57K area, then that's when you can start to raise some cash again, or be a little more tight on your stops. So I think that's the way I would manage this now. Is pretty simple. We're stretched, we're overbought, it's riding the upper Bollinger Band. We're, you know, kind of coming into all of these things right now. So there's no point in looking at all the oscillators. They're all on the overbought side at this point. I would just be looking purely at this area here as the breakout. And now I want to see the market accept the breakout. So that's what I'd be watching. You can translate that to basically any of the majors at this point. The NASDAQ 100 broke out to all-time highs this week. And so I'd want to see it stay above, you know, call it 630 or so, 635, somewhere in here. That's what I'd be looking at now to keep this market as healthy and as strong and as momentum driven as possible. If we go to the Russell 2000, also a breakout, came on Friday, so a little bit later here, but, you know, generally speaking, weekly chart, you're still up 3 weeks in a row. You're still effectively resolving a range that started months ago to the upside, and you have the context of a higher low in place. So all of those things I think we sort of already touched upon earlier. The VIX, if we take a look at the VIX here, again, I think if you need to hedge your portfolio, this is a much better time to hedge when the VIX is in the teens. So you could certainly consider that. And while we're on the hedging sort of mindset, XLE, now maybe this conflict is entirely over, but XLE has now, which I think is still the best performing sector of the out of the S&P 500. I could be wrong at this point, but I think it is. It is now down. So it's, you know, I had a 15% correction here for XLE. I think this is an attractive spot too. And especially if you're playing the longer term kind of portfolio manager hat on, if we are in a inflationary regime for longer, higher interest rates, just kind of a different macro regime, XLE is something you want to have in the portfolio. You're getting a pullback now. You're getting a check back to a multi-year range. This feels, you know, logical to have, but it depends on what kind of investor you are. Netflix reported earnings. Market didn't love it. Down 10%. I don't know. I don't have too much to say about it. It's not a name I just don't ever really trade Netflix, and don't have any strong opinions on the company. What else? We talked about rate. We didn't look at rates here, but IEF. So again, catching a bid. Let's pay attention to this. If rates continue to come down, then that's going to be a good thing. Let's look at crypto. Again, you can check out the video I posted. I basically talked about this setup right here, and we're at the inflection point. So Bitcoin, 75K is an important zone. It's where we peaked in March. If we zoom out even further, it's where the downtrend roughly is coming in since October. And you can see we're starting to surge up here now. I think we just need a little more convincing. Our Galahad portfolio, it trades Bitcoin from a trend following position, but a very longer term positioning. It's still not in yet. It's getting close. So I'm interested. I did buy some on Friday as it started to, right at, pretty much at the open as it was starting to make its move. So I do have my foot in the door here again from a trading perspective. Long-term systems, the heavier allocation, still not quite there yet. But I do think there's a bit of a volume pocket. And like I mentioned in the video, I think if we do get acceptance up here and we start to, hold above this 77K area, I do think 90 is coming pretty fast. I don't think it's a slow move. I do think Ethereum is also interesting. Crypto in generally. Obviously, we need to get the clarity past the Senate, and that's still TBD as a bigger unlock catalyst for the space. But it's been pretty left for dead here for some time. And like software, it started its sell-off earlier. It had, everything here is still in pretty steep pullbacks. And so if we are going to start to be in a more risk-taking regime where, Fed is going to be, printing money and then, rates coming down or staying the same or down now, I think you have to pay attention to this. I think the risk to reward sets up a little bit better here. So that's where I'm spending some time now, is looking at this space. And let's take a look at some other names here from our bullpen, shall we? So here is our main dashboard. This is updated on Friday. S&P was up 1.19%. Galahad up almost 2%. Quant Rockets up almost 2%. We have so many stocks on our momentum list. 91. That's the highest we've seen here. I might have to start tightening up these parameters so we don't get so many stocks here in the future. Cypher is a name I do want to talk about. We hit a lot of profit targets. So 17 profit targets hit this week. So again, I think while we think about process as a trader, you want to be taking some gains off the table into strength, especially things that have run. And if you were obviously in the fortunate spot to get exposure early enough, then you have that luxury. Galahad this week still fared pretty well. I was a little bit slow, perhaps getting involved and keeping pace with the S&P 500, but I'm happy all around with its performance and its activity. Let's go back to our market environment dashboard. So another cool thing that we started to build out here is industry strength. So we're tracking kind of 1 month industry strength. And so we can see breadth at a glance here, just based on the GICS 74 industries on the S&P 1500. So electronic equipment is currently the #1 rated. So we can go into Quant Rockets here, and I guess we'll just look at these. Not that I'm saying these are all quite actionable, but CLS, for instance, here's one name, top industry, swing trade. Again, this is now a little stretched, so I can't really say to be buying that now. Same thing with FN. We've been in it now for a little bit of time. Flex, talked about this endlessly multiple times while we were at a loss or a gain. So this is running, this is working. COHR. TTMI, I think, is an interesting one, starting to rebound here on Friday. So this one's not too late. Top industry name. You've got some structure here. You've got a multi-month base. You've got a little bit of a pullback. So it's something to hang your hat on. GLW kind of flagging out. So again, this one kind of reasonable reward to risk. And AEIS, not bad either. This is one that we bought on the gap up, and it's just going sideways. So there's a handful of names there. Let's look at my watch list to see what else I have on the watch list. Cypher, yeah. Cypher, I think, is a great one too. So this one is one we got involved in pretty recently. Next target's up here at 2250. We got a stop around 1476. Take a look at Cypher on the weekly. It looks pretty beautiful, breaking out here of this multi-month kind of channel flag consolidation. That looks pretty nice. Volume's starting to pick up. We like it. We're involved. I think that's pretty actionable, even though it's run a little bit. And then Rocket Lab. Yeah, we finally got involved into this one. This is one that was kind of dancing around a potential entry for us. We've traded it in the past, but we finally got involved as it started to, kind of clear over this 74 area. So we have that on the model. So that's it. A busy week. There's lots to discuss, but changing gears is hard. Having a process, having, rules and discipline, it matters so much, and I think this period shows it. So if we can help with any of the work we're doing here with these trading systems, we've got links in the description of the show. We've got our IBD sponsor, or reach out to me if you just want to talk shop about what you're up to and see if I can help you kind of work on your process. All right, that's it for me. Thanks as always for tuning in. We'll see you back here next week. Take care.